That mean old reversion. Hi, Dean Jenkins with followmetrades.com. And by that mean old reversion, I mean reversion to the mean. So the S&P 500, I'm showing the daily chart for the S&P 500 cash. Last week put in all-time new highs, and that's awesome. In our trading here at Follow Me Trades, we've been predominantly long, and we've been participating and profiting from that. We always have an eye to what's going to happen next, and always have some, in an uptrend, some cautious optimism, and always looking for when will a trend end. Trends don't go on forever. And, looking at moving averages and, the truth of mean reversion, meaning that most trends, even in an uptrend, will pull back to the mean or to a moving average before continuing on is, it's a well accepted technical analysis technique. It's a reality. And just to review, let's take a look. Here's a review of Dow theory. And this portion of Dow theory concerning trends says, hey, an uptrend is composed and marked by higher highs, higher lows, higher highs, higher lows. Stocks and prices don't move in a straight line. They go up, they pull back, they don't go below the previous highs, and then they go on to make new highs, and they pull back to a higher low, and then they go on to higher highs. That's what an uptrend looks like. Downtrend, of course, is the opposite. And so we see that playing out. And what's interesting is that, after new highs in particular, there traditionally, typically, is some kind of pullback, at least to a support level. Now I'm showing the Ichimoku cloud. It's this green and red line with the shaded area between it, and then a 200-day simple moving average. The Ichimoku cloud at its core is really just moving averages. They're calculated a little bit differently, but they really are moving averages, and they show crossovers. And of course, the green shaded area is an uptrend, and red is at least a temporary down area. The settings I have in the Ichimoku cloud are shorter term than the 200-day moving average. So I really have three moving averages displayed here. And again, the Ichimoku cloud is just a different way of looking at it. So we're in an uptrend for sure. And again, we've been trading and profiting from an uptrend, the reality of the market. But we're always watching, is it going to pull back? Now you can see it's been quite a while since the market pulled back to the 200-day moving average. It's been, it first happened this year in February, and then in spring we pulled back to the 200-day moving average. It's been a few months since July since it pulled back to the Ichimoku cloud. And you can see historically, and you can see this as any time period you look at, once the market goes in and puts in new highs, even minor highs, there typically is some kind of reversion back to a minor support area, slower moving averages, moving averages like the Ichimoku cloud, new high here, pull back, new high here, pull back. And it just, that's the pattern. That's what it does. New high, pull back. You can go back and again look at the charts in any period of time, and that's the behavior of even an uptrend. Eventually, the uptrend will end, and there will be a major correction and a downtrend, and we'll be ready for that. But meanwhile, we're undisputably in an uptrend, but we do expect minor reversions to that mean old mean and pullbacks. We got a couple down days at the end of last week. Is that the pullback? Well, let's just watch. We get a couple more, and we could be pulling back at least to, faster, shorter term moving averages, perhaps even back to the 200. And even then, it would all still be as part of a normal part of an uptrend. And some of these, even minor pullbacks to the Ichimoku cloud to the 200, can be very tradable opportunities, even if it's going to reverse then and continue on. You can go find an infinite number of articles calling for, the absolute end of the bull market and a major correction coming. We don't know that yet. We're just going to play it day by day, week by week, check the realities of the market and trade accordingly. But we do see that it's been since July, and here we are on Labor Day, September 3rd, since the market has pulled back even to the Ichimoku cloud. So the longer it goes, the higher the probability of at least a short-term pullback. And again, those can be very tradable. So we'll be watching step by step as it goes and adjusting our trading accordingly. And even during this uptrend, we had some nice short trades. The whole market doesn't go up. This is really the average. The S&P 500 is the average of 500 stocks, and most of them were going up. So we trade the realities, we watch it, we expect a pullback, a reversion to mean, even if the uptrend is going to continue. Next week, there's really not any major economic news planned coming out. We got P&I manufacturing, ISM manufacturing on Tuesday, the open of the market. Really, international trade, we kind of know what that situation is. Nothing new there. We got the ADP employment report, jobless claims on Thursday. We expect the reports to be good. If they're not, that could cause some volatility. Factory orders should be interesting, ISM non-manufacturing, and then the employment report coming out on Friday. Those, the factory orders, employment situation, those could be market moving if they are a surprise. But no surprises are expected. Volatility would be dominated by any unplanned news, particularly any bad news, on trade. Of course, NAFTA is being renegotiated, and bit of an impasse with Canada. We'll see if any news breaks on that this week. That could cause some additional volatility. So we'll keep watching. We'll keep trading the realities, and again, look for the beginning of a reversion, maybe a tradable opportunity there, even if the ongoing uptrend continues. Let's take a look at gold. Gold's getting interesting. Gold, of course, for most of the year has been in a pretty marked downtrend, as you can see here, starting in January, and a pretty big slide from a high of 1385 down to a low below 1180. We got a bigger pull up off the bottom than we've seen in this whole move once it really got some momentum. So what I'm looking for, we got this high. If we pull back and don't put in new lows, reverse, put in new highs, there could be at least a correction upward beginning in gold, and that could be very, very tradable. So we're watching very, very close for that. And we're looking, I've talked about in the trading room and the stock pick updates, a new tool I'm using, Vantage Point Artificial Intelligence. We're looking for some early signals to take some long trades on gold. We don't have confirmation of those yet, but they could be coming pretty soon. So that could be really, really interesting. So that is it for this update. Watch very carefully. As always, use risk control in your trades. Trend is your friend, of course, and stay with the trend, but be watching for signs of at least a very, very short-term trend change, and there could be some profit opportunities in that. Well, that's it. As always, I welcome your comments, your questions, and your feedback, and look forward to seeing how it all plays out. And hope you all had a great long weekend, great Labor Day holiday, and we'll catch you on the next update. Thanks.